Hey, morning everyone. Welcome back to Morning Cup by Aiman here. Right, so looking at the S&P 500, well, it tumbled by 1.52% to close at 7316 points on Wednesday session, posting a sharp sell-off as the Fed kept its recent interest rates pull recently, right? So despite the unchanged rate, the Fed policymaker voting for an immediate rate hike, paired with the volatile in the oil prices, sparked severe fears that the central bank is falling behind the curve of on the inflation. Right. So at this juncture, we see that the sentiment pivoted to the defensive stance. Also, looking at the charts now. The index is now fell below both 50 and 21-day SMA lines or the moving average, which also signaling that near-term bearish trend remains intact right now. Right, so looking at our US trading stocks that were published overnight, so we got here IBM, or the National Business Machine. The stock is experiencing a breakout yesterday at 225 US dollar. Right, so now we can expect the stock to travel towards the 240 US dollar on a strong momentum, followed by the next resistance is at 255 US dollar. So now if they counter to reverse, do watch out for the 210 US dollar support level. Also next, we have Booking Holdings, stock could be K and G, right? So the stock is experiencing a breakout as well at 195 US dollar. So now we can expect that the stock to travel towards the $210 level. The second resistance is at $220 level, and do watch out for the 185 support for any attempt of reversal, which also could reverse below this 21-day moving average. Right, so looking at the China A50 futures were rebounded 0.54% in a Wednesday session to close at 14,754. Right, this holding, which also go above the key ground after Tuesday's tech-led sell-off. Also, the mainland benchmark recovered as the selective buying returned to the tech, hardware, optical components, and also the property plays, while the institutional investors actively position ahead of the Politburo meeting expected later this week, which is on the 30th. So technical wise, the index futures are now consolidating above the 200-day SMA lines, and a positive outcome from the meeting may extend the bullish move higher and charge towards the immediate resistance of 15,500 resistance level. Looking at the WTI crude oil futures, well, surged around 7%, over 7% on yesterday's session, right, to settle at $84.85 per barrel, snapping the 3-day sell-off as the tension reignited. So, if you're aware of this news recently, well, the sharp rebound was triggered after Iran launched a surprise attack on the US forces in the region, which also President Trump responded, that the US will give Iran a beating, which effectively loses hopes for the diplomatic ceasefire as well. The oil futures went back up and crossed above the 50-day SMA lines, rebounding from the 75 level as volatility comes back in. And also looking at our local market here, the FBM KLCI closed higher by 0.18% to close at 15.56 points on Wednesday session, while the FKLI is down slightly lower by 0.12%. So the KLCI, found support as the investors rotated into the defensive consumer names and also the plantation with like Nestle, the United Plantation as well. Also, I talked to this one of our consumer analysts yesterday, right? Saying that the consumer is still an eye on of investor. The SARA initiative remains on the key catalyst. I think most of the stocks also are experiencing a derating of valuation, in which undervalue stocks may arise. Moving in this third quarter and beyond. Um, However, the persistent headwinds in the global semicon sector kept the FLI under slight pressure, right, hedging ahead of the US policy meeting. And also looking at the heat map now, well, it reflects a healthy broad-based recovery driven by a strong interest in the tech and also the manufacturing names like Netgate, Vitrox, Dufu as well. Dufu up by 5.76% yesterday, along with the selective buying the defensive heavyweights like Nestle, right, up by 3.3% yesterday. Also taking a look at our Malaysia trading stocks, and what we have Gas Malaysia, right? So the stock's on its breakout formation higher at 5.25 cent level on a strong volume. So with that, we expect the momentum to keep bullish, to be positive, and the stock able to test the first resistance at 5.50 cent level, followed by 5.75 cent level for the second resistance. So if the stock to clear below 5 ringgit support, this could reverse the course and trend lower. Also, next we have Oriental Kopi or Kopi, right? So the stock is experiencing a breakout as well at 96 cent. So if the stock remains bullish, we expect the 104 cent to be the first resistance, followed by 112 cent to be the second resistance level. And do keep an eye at this 88 cent level for any attempt of reversal. So today we have two breakout stocks for Malaysia trading stocks, which is Gas Malaysia and also Oriental Kopi. And for US stocks, we have two breakout stocks as well. So just also, a stock that is worth looking at now is also VS. So we recently published a technical report on this as well. It managed to climb, and clear our all of our resistance recently. Now, after it came back down, we saw that a bullish potential of continuation for further up, right, for the counter to continue riding on its bullish momentum. Now, if you see here, right, the chart is forming a trend continuation structure, okay, of resistance becomes support. So this is the triple resistance, and this is the breakout, and this is the support, right? Where if the positive bullish momentum to follow through, well, it may reclaim back the resistance level right here once again, right? And also for the FCPO, well, it rebounded by 0.43% in Wednesday session, snapping the two-day losing streak as the bargain hunters return to the market. The uptick was also supported by the recovery across the oil contract, edible oil contract in the peer exchanges. Steadying the global crude oil prices and also the robust export data showing a strong July shipment as well. Technical wise, as long as the index now resting or remains above the 50-day SMA lines or the moving average, right? Well, the sentiment are now focusing towards the upside and potentially targeting for the 4,900 points level, and we remain our positive bias unchanged. targeting for these two resistance level, which is 4.9 and also 5.1. Right. So yeah, that's all from me, and I pass the floor to the next presenter. Thanks everyone, and happy trading.
Thank you, Aiman. Um, so moving on, we do have a healthcare sector update. Basically, we have attended Bank Negara Malaysia's Sasana Symposium 2026 yesterday. So these are some of the key takeaways. In terms of the reset strategy as a whole, there's 11 initiatives under this strategy. They have mentioned that 7 of these has actually progressed significantly since a year ago. This spans from price transparency, including drug price display as well as itemized billings. You do have your digital electronic medical record rollout as well as insurance restructuring, which is the Medi-Asas, right? So in terms of Medi-Asas wise, the pilot launch actually happened yesterday. And if you were to refer to our previous report, again, this is the pilot launch will be limited in Klang Valley, and it will be 6 insurance operators will be participating with full public launch scheduled by 2027, right? From the event yesterday, this is on DRG as well as Medi-Asas. While we understand that while the eventual shift from fee for service, which is currently how hospital operators are billing, to DRG rates eventually, that could limit private healthcare operators' ability to actually expand revenue intensity via itemized billings. In our view, we still think that that there should be minimal near-term financial impacts. The regulators themselves, they do acknowledge that no DRG system globally is actually immune to operational gamings. So operational gamings meaning that you do things like upcoding to inflate case mix. You do early discharge of patients to save out some costs, patient cherry picking as well as some back-end billings. So the participation of DRG remains voluntary until all necessary systems and data infrastructure are fully established. Right. Meanwhile, the DRG base rate would strictly applies to the newly introduced Medi-Asas product, with a planned phase introduction of the DRG FFS, so DRG fee for service hybrid adjustment mechanism, is expected to smoothen the eventual transition towards DRG based pricing. Secondly, it's on electronic medical records. So they introduced something called the Malaysia Digital Health Certification Network, so MDHCN. Basically, this is a network that is establishing a standardized one person, one record architecture that is built on global standards like the International Patient Summary. So for this, the initial onboarding includes major private hospitals, including your KBJ, IHH, as well as Sunway Healthcare, and other smaller hospitals like Cellgate, Masa, as well as Pakote. There's also digitalized public sector infrastructure that's participating in this. So for this, historically speaking, private hospital operators have been hesitant in terms of sharing patient data due to privacy concerns as well as administrative friction. But we do believe that these barriers were addressed by the introduction of MDHCN via patient-mediated explicit consent framework that actually gives patients control over their data and who they're sharing it with. This will be done via MySejahtera. So all in, we are still overweight on the sector. No changes to our core thesis as well as topic. We still believe that KBJ is best positioned to benefit from the eventual implementation of this MHIT as well as DRG, particularly through its extensive network of secondary hospitals that operate at relatively lower cost base. Right. That's all from me. I do believe that I'm the last speaker for today. Thank you all for joining. I'll see you again tomorrow at Morning Kappa at 8. Thanks.